Markets finally moved, not in price, but in posture. Capital is awake again, projects are resurfacing, but risk is still sleeping with one eye open. I'm Omid Shahbazian, and this is CRE360 Market Intelligence, your snapshot on how commercial real estate really feels this week. The Fed's quarter-point cut didn't ignite the rush. It started the negotiation. The 10 years hovered around 4%, while SOFR slipped just under it. That means cheaper money on the paper, but the same hesitation in practice. Lenders are running scenarios they don't quietly believe in yet, and borrowers keep testing refis that still miss their marks. Everyone wants to move, but nobody wants to move first. This is not a freeze, it's a standoff between the fear and opportunity. And the first transaction that closed now will set the pricing for the next cycle. Out in the field, the numbers finally behaved for a change. Office vacancy eased to 22.5%, a tiny move but significant improvement since 2019. Retail absorbed space again, availability is under 5%, and rents are up 1.8%. And industrial remains the workhorse with roughly 60 million square feet leased and vacancy around 7.4%. Multifamily rents fell about 0.3% in September, but more than 500,000 units are still in leasing. Hotels held steady, flat RevPAR and occupancy in low 60s. The pattern is clear. Properties aren't waiting for the rates to drop. They're adapting to where the money is. The story is discipline, execution over excitement. And that alone is enough for operators to breathe again. On the construction side, costs finally found some balance, steady enough to plan around it. Turner's Index is up 4.2% year over year, and ENR is around 3.2%. Steel is up 9.5%, labor 4.5%, and backlog holds near 8 months. Construction crews are booked again, and bids are landing quickly, but margins are remaining tight. Developers are trimming scope instead of scrapping deals, and financing is back for the teams who can prove delivery. This is what the real deal looks like. No headlines, no spiking chart, just steady motion you can measure. Stability isn't flashy, but right now is bankable. Rates moved, but behavior hasn't, at least not yet. And that pause is the opportunity. I'm Omid Shahbazian, and this is CRE360 Market Intelligence, where we track what changed and why it matters. This briefing is part of our CRE360 Market Intelligence pack that we produce every week, which covers capital, rate, credit, lending, valuation, property fundamentals, construction and cost, as well as capital flow and risk. You can subscribe to our daily newsletter, our podcast, and access to these reports with full charts and analysis at CRE360.ai. Stay positioned and see you all next week.
Subscribe at CRE360.ai, your edge in real estate market intelligence.